Hello, this is John again from Pike Exmo Study, and I'm here to share with you the significance of the market cap compared to Bitcoin price and where we're currently at in the market. As I just did a video on ETH, which I highly recommend you watch, we have a little bit more history to go by here on Bitcoin to tell us what kind of moves we may have going forward. And if you look at the screen here, you see I got some percentages wrote down here already, and I'm going to break down these percentages to you on how I came up with them and what to expect moving forward. Again, if you watch my last video on ETH, you'll hear me talk about the 111 MA. That would be this blue line here on the market cap. The market cap is over here on the left, and we got the Bitcoin price over here on the right, and here is the 111. This is a 2-week chart, and the significance of getting past the 111 cannot be overstated. As you heard me say in the ETH breakdown I did about the importance of the 111 MA, we are of utmost significance of importance currently on Bitcoin as it pertains to market cap and as it pertains to actual Bitcoin price. So I'm here to give you a thorough and breakdown analysis of what is going on currently with what I foresee is going to happen in the near future as we move forward now that we have finally gotten above these 111 MAs. And if you saw my ETH chart, you'll see that we can't be bullish on the altcoins until we get above the 111 MA. And now you're going to see why I say that when you see the significance of it in Bitcoin. So first off, let's look at the market cap of Bitcoin. Right now, we currently reside at 671, okay, for market cap of Bitcoin. We hit a high up here of $1.27 trillion. Okay, keep that in mind because I want to come back here. History is always generally a good indicator of the present. So, what can history tell us about where we are at right now pertaining to this? Now, look, follow this blue line. Now, the orange is your 50 MA. And you heard me talking to Ethereum how you kind of sandwich in between these 50 and this 111, and then you finally break out above the 111. Look what happens when you break above the 111. Look at this. Look at that big surge. You'll say, "Oh, that's the ETF talk." No, this is history, guys. It was already showing itself well before that. Break above the 111, and look what happened. Boom, we crushed up out of here. Okay, that's the significance and the importance of this 111. And nobody ever really talks about the 111, so I kind of pride myself on it. But look at this 111 going all the way back. Look, we stay above the 111. Look at this. Boom, we shoot up. I mean, we just skyrocket above the 111 once we finally get past it. Look back here again. So this is your high in 2017 of 318, well above the 111. See, look what happens when we get above the 111 here back in 2016. Look at this. We just skyrocket. All right. Now, do I think we're going to skyrocket this time? That's what I'm here to tell you. So we skyrocketed here, and then we came back down below this 111, right? Here on the Bitcoin market cap. Then we fought back above it and came above it, but we did not come to the top of this 326 range. We only came up to 238 range. So this could be our first indicator of how we move now. That percentage from this top, and I went from the wick, 335 down to I went to the wick. I didn't go to the close. I just went to the wick. That gives us 25.81%. Will this be significant as we move forward? So here's what I'm going to show you. So let's go to where we're at currently, guys. And this is where we rejected here. We created a higher low, okay, or lower high. I apologize. But then we ultimately came down, which, the COVID crash right here. Okay, we wicked down to the COVID crash. Let's come back to the current. Now, look at this. We're above the green and we're above the orange, right? Wonderful, right? Oh my gosh, full on bull, right? Yes, full on bull. We're to the moon, to the moon, or not. What if this 25.8% right here will tell us where our stop point could potentially be? And we also create this lower high once again on the total market cap of Bitcoin. So let's say you apply this 25.1, and I'll make it bigger for you, try so you can see it. 25.81%. What if we apply that same metric to the top here, okay, that we got in 2021? 25.81% is, and you see it here, I got it right there, 25.81% gives us a 933, almost 1 trillion, almost right at, we're butting right up to $1 trillion. Okay. So how's this going to impact price moving forward? First off, you would want to watch this level to hold. You don't want this to be a big fake out and we come back down and potentially come back to, and what's this green line? This green line is your 200 moving average on the, which would be 321. So what if we get this big fake out and we just come back down, right? So as we stand currently following this same metric and going on how we repeated last cycle, where we came back up but rejected at 25% lower, that would give us a target right now of $933 billion, just short of $1 trillion. And that works. That lines up because look here on your RSI. I'll make it. See right here, this breakout. We got a nice breakout on the 2-week, and you'll see how I got this line here. This is where we peaked. Okay, now look, 86. Then look at our next peak. Our next peak, 92. Okay, keep following this line. Our next peak should be somewhere in the 86 range again. Okay, following this line. We got nice bullish divergence building here as well, which has been building since looks like June of 2022. See, look at this. Nice bullish divergence building up. But we are, coming and getting this wedge is getting tighter and tighter, of course, as we go. So all the way back here. Now we got bullish momentum, bullish divergence here. So saying all that, what do I potentially think is going to happen? As long as we hold this 111, I'm happy. Because now you can see to get us up to 933 billion, just short of 1 trillion, maybe even a wick up to 1 trillion, you're talking a move of 33 to 35%. I got 33.9%, which is not touching the line perfectly, so let's just call it 34%. How will this impact price? That's what I'm here to explain to you. So you'd want to go back and say, okay, for every 34% move that we have in market cap, here's a 33% move, how much does price go up comparable to how much the market cap goes up? Then this can give you an average of how much each American dollar or how much each dollar going into the market is actually worth. Is it a 1-for-1 ratio? Is it a 1.5 ratio? What is the actual value of each dollar you would put into the markets on these gains? And right now, let's say right here, see right here, we hit 2. Now we're back here in December. Okay, the December drawdown, 300. We had a 33% move up to 395, right? So, and I go on that metric because, again, to hit this resistance here, that's 34%. So, I mean, we could stretch this up to 34% to give us an idea of how much we came up dollar-wise. So, Now that I say that, and you have the idea that we're coming in roughly our target as we stand, as long as we stay above the 111, our target right now stands at roughly right under $1 trillion, another 34% gain essentially. Now, let's come over here to the Bitcoin chart. First thing we see right off the top, and again, compare this to the ETH that I just did. We're above the 111, this blue. Super important to get above this blue 111. Why? Look here. Look at all this. Look, we above the blue all the way up to the top of 20K. Then we broke down to 3,700, $3,000, 3,300. Then we got back again, but here we are. We created the lower high, and then we lost the blue once again. We lost that 111. But look what happens when we reclaim that 111 once again. Look at this. Of course, the monetary policy stuff was different. Micro conditions were different. But again, once we reclaimed right here at $7,500, we never came back below it. All right. So let's keep that in mind. Are we going to repeat the lower high structure and then come back down to essentially do this double bottom here at 15K, which look over here and I'll make it bigger for you. Right now, our MA for our 200 sets at 16,788. Do we come back to do this kind of double bottom structure similar to what we did here? Boom, boom, right? We can't answer that because we don't know how it's going to move forward. But what we can answer, as long as we stay over this 111 and we have a target of just right under $1 trillion on the market cap, we can see how it moves. So for every 33%, okay, so here's a 33% move on the market cap from our low of December drawdown to right here. There's 33%. That's where we went from 300 up here to 410. What happened price wise when we did this same move? Look over here. I'm going to make it bigger for you. This is why we can come up with certain percentages. Okay, the December drawdown. What did it do when we got the price? It went up 42%, but actually the following 2 weeks, so you're talking over a month period here, right? We actually went up to $24,000. And I will highlight that because this will give us two different areas of target range, right? And now we can kind of start to figure out, the American dollar, or 51%, so 42 and 51%, right? Market cap goes up 33 to 34%, but yet on the dollar, we go up 42% to 51%. Now you have how much each dollar you're putting into the market and what the value may be on what it pertains to and how much your money could potentially move on a 34% move in market cap. So going from current prices, I'm strictly going from current prices. I'm not going from the blue here. I'm not going from the 111. I'm strictly going from current prices. 42% move is $49,000. Ooh, wow. So this is why you hear us say, just like I did in the last video, it's okay to pay more when you know it's going up. How do we know it's going to go up? We're above the 111 MA. We need a weekly close above this 111 MA. Okay, weekly, and this is a 2-week chart. It'd be even more beautiful if we stay above it on a 2-week chart, which closes in 11 days. So, that would be the first of next month, somewhere in there, first 6th or 7th of next month of November. 42% gives us $50,000. And we'll say, oh my gosh, well, we already know the significance of $50,000, right? Here's the significance of $50,000. For one, it's psychological. Two, you'd have to see if we have the risk appetite to even pay $50,000. Three, if the ETF is approved by this time, will institutions be willing to pay $50,000 and beyond? You have to ask yourself all these questions. But currently, as we stand, staying above this 111 opens up the possibility for right around $1 trillion, maybe even a wick up to that $1 trillion. And then we could have this drawback down to here, the retest, the same way we were talking about again from, history generally likes to repeat itself. Boom, boom. Then you're talking about a big A, B, C correction, A, B, C, D, and then your E would be back down here on the Bitcoin price. Again, here we look good, right? We look good here. We look good here. We've broken out on the Scholastic RSI as well. See, we're trying to break out on the Scholastic RSI right here to finally go up here to meet $49,000. Again, importance of 111 MA. You'll see it over and over, and nobody really talks about it, and I don't understand why. And if they do, I just haven't seen it. So for every 34% move up in market cap, we can get 42 to 51%. Okay, so let's say we can even just do it from the breakout point, right? So let's just move this puppy, right? From, that 111 and move it down. So that's still $44,000. Now, how big was the retrace here to here? So let's figure this out, and then let's try to finish this video up. And will history repeat itself once again? This is what we want to find out. So look, 27%. So let's clone this 27%. And see, that's showing all the way up here at $59,000 if we would do it price-wise. But what did we just tell you with price? For every 34% over here, we get 30 to 51%. So what I would like to do here is go ahead and add in 51% move. And I'm just going from the breakout. I'm just going from the 111. I'm not going to go from where we're currently sitting at right now. We'll go from the 111. 51%. So that's at $47,000. So we have two variables we can go on here, guys, roughly. Okay. We have these two areas right here. So anything between 45 and 50 is really a good area right now, as long as we hold this 111 MA. Hopefully this breakdown really helps you understand where we're at in the markets, and it truly gets an understanding of how important the 111 is moving forward. Staying above it, good to go. Do we repeat what we did in 2017 and 2020? But I would still like to add, as we look right now, we can, get up to this $40,000 to $50,000 range. So don't let it fool you. Again, this parallel breakout gives you a $42,000 by holding 25,000. So we're looking good. I'm not uberly bullish, and I'm not too bearish. We have plenty of room here. I mean, that's good gains moving forward. That's why you don't rush into the markets. You always zoom out. Learn to understand the markets, what the dollar cost averaging is, how much a dollar actually equals once you put it into the markets. I want this to be a nice educational video to help you make good educational decisions. If you like it, please like, comment, and follow for more trade ideas.